Hello guys, welcome to our YouTube channel Above Debits Credits. Here we are dedicated to make accountancy simple for you. So today we are going to understand how to pass a journal entry. Okay, and in the series of videos to come, guys, we are dedicated to make you understand how to pass journal entries under both the golden rules and the modern rules. Yes, exactly. So if you are not subscribed to my channel, please subscribe it and stay tuned. So before moving ahead with journals, let us first tell you that if you have not watched my other videos on golden rules, modern rules, the basic accounting terms, the business accounting terms, I would just suggest you to watch those videos first and then come back to see this video, because by that process you will get a clear understanding, because those concepts are important in understanding the journal part. So moving ahead to the first question, the first transaction over here, we find that Raj, the owner, he started business with cash rupees 20,000. Now what actually this person is doing, this is Mr. Raj, he is introducing rupees 20,000 to this shop. Fine. And we have discussed earlier in our tutorial that we think from the business's point of view. So we actually have a viewpoint from this shop, and we treat ourselves as an accountant for the shop. So we are bothered about what actually the shop is doing, what transaction is it entering into, and we're not bothered about what the other person or the owner is doing. Fine. And guys, let me be very clear with you, any transaction at least have two accounts being held. Okay, so over here we find that Raj, the owner, started business with cash 20,000. That means this person, he takes out 20,000 from his pocket and he introduces and invests 20,000 to this business. In other words, we can also read this as this shop takes 20,000 from this owner. So the two accounts over here can be cash account and Raj account. Now Raj account being a personal account and being an insider, fine, he can also be regarded as an capital, because any liability or any personal account from where we who is a like the insider or the owner is also regarded as a capital account. So under golden rules, we classify account under the three categories as discussed earlier in my first video. That is the real account, the personal account, and of course the nominal account. Fine. So cash account is an a real account over here if we make a golden classification, and the Raj being a capital account is a personal account because he's a person. Fine. The golden rule for real account is what comes in is generally debited and what goes out are generally credited. So if we see that Raj, who has invested money to this business, and if we go and go on to see what this shop is actually doing, is it is taking cash. So cash of rupees 20,000 is coming into this business, right? And if we go by the golden rule, what comes in is generally going to which side? Yes, it goes to the credit side. So real account said what comes in is debited and what goes out is credited. We have to take note in regard to the personal account. The personal account over here is Raj. Now what we are bothered about with Raj is what actually Raj is doing, like what is he actually in a position in. Fine. So we see that we are taking cash from this person. Now what Raj is in the position, Raj is actually giving, so he can be regarded as a giver. And in the personal account, receivers are generally debited and givers are credited. So which side it would go? It would go to the credit side. Now gives us to the first journal entry, as you can see, cash account being debited, right, and capital account, Raj account, being credited. So the format or the performer to pass down this journal entry is cash account on the first line debited and capital account on the credit side, which is written on the next line. And as discussed earlier, that debits and credits are nothing but the two opposite sides of anything. So if we write cash on the first line, generally we write the credit part on the second line. Similarly, if we go with the same example to solve the same question by the modern rule, we find that the two accounts which were involved are the cash account and of course the capital account. Fine. Under modern rule, they classify accounts into 8 categories. Assets, losses, expenses and drawings are written on the debit side, and capital, liability, incomes and gains are written on the credit side. So the the parent account of cash account would be an asset. Okay, and the modern rule classification for capital account, it's itself capital account, so this would be a capital. Now the rule under the modern concept is that an increase in asset would be debited and a decrease in asset would be credited. So if we go with the question, we find that this shop is taking in cash of 20,000, which increases its cash in the hands of this shop. Fine. So there is an increase, as you can see, an increase in asset. So an increase in asset would go to which side? Please tell me. Okay, fine. Exactly. It would go to the debit side. And as you can see that when we take in cash of 20,000 from this person, what is actually happening with us is we have created an obligation to repay back this person's 20,000 sometimes in future. So that creates a responsibility or an obligation on this, on the head of this shop against this person, since this person has given us cash today, which would he take like later in the future. And as we see that we have taken in liability towards an insider, which is increasing over here. So if we are taking funds, it is creating a liability, an obligation towards him, and there is an increase. So under the modern rule, an increase in capital would be credited, a decrease of capital would be debited. So the capital is increasing over here, and so this would be under the credit side. So we are getting the journal entry straight away. As you see over here, cash account is being debited and the capital account being credited. So the journal entry would be cash account debited to capital account by 20,000. Okay, moving ahead with some more examples. Fine, I hope you will be helping me out with this example. Here we see that the shop purchased goods on credit from Ramesh for rupees 15,000. We see that the shop is actually taking the goods not on cash but on credit. Fine, and we are actually incurring a liability since we are taking the goods now without cash, but for which we have to pay something like the funds or the cash sometimes in future to Ramesh. Now we have already learned that this is a liability, and a liability for goods is known as a creditor. So creditor over here, Ramesh can be like regarded as a creditor. So the two accounts which is involved over here, you can say, is your purchase account and of course Ramesh account. Ramesh account is a liability. Ramesh account. Fine. So under the golden rule classification, purchases are basically the nominal account, and Ramesh, as you can see, is your personal account. So the rule for nominal account is expenses or losses are debited and incomes and gains are credited. So by purchasing goods, we are incurring an expense, which is you can say that there is an expense part which is being incurred, and an expenses is going to which side? It would go to the debit part. Exactly. And for Ramesh account, again a personal account has come, so we have to be very particular about what this Ramesh is doing. What in what position is he actually when he's entering into a transaction with us? So he is giving us goods. We are purchasing goods, and he's in a position to give us goods. So over here he's a giver, and a giver would be credited. So it would go to the credit side. So we find our next journal entry, as you can see, that purchases accounts are generally going on the debit side, right? And Ramesh is going on the credit side. So the journal entry would be purchases account debited to Ramesh account by 15,000. If we take the same example and go on to solve it under the modern rule, guys, so the accounts, so the two accounts that were involved were purchases account and of course Ramesh account. And under the modern rule classification, purchases is an expense straight away, and Ramesh is a liability because we have created an obligation on us, on our part, to repay him back. So the rule for the modern rule for expenses, increase in expenses debited and decrease in expenses credited. So by incurring an expense by purchasing goods, we are actually increasing our expenses part, right? So there is an increase in an expense, and an increase in expense would go to which side? So it would go to exactly the debit side. For liability, Again, we can see that the liability is increasing when we are purchasing goods on credit, right? We are creating a liability on our head, on our part to repay him back. So there is also an increase in how much we are going to pay in sometimes in future. So an increase in liability, as you know already, is credited. So liabilities are increasing, it would go to the credit side, and we have our journal entry. So the journal entry would be purchase account debit to Ramesh account. So moving ahead to the third example, I hope you have gained some confidence with the two examples above. I hope you will be doing the third example by yourself. So the third example is the shop paid cash to Ramesh rupees 15,000. The shop is paying like 15,000 cash to Ramesh. So the two accounts over here, as you can see, is your cash account and your Ramesh account, right? So golden rule classification for cash is a real account, Ramesh being a personal account. Okay, so the rule for real account, what comes in debited, what goes out credit. So when we are paying cash to Ramesh, cash is actually going away from us, that is, it is going away from the shop. So the rule is what goes out, and what goes out would be credited. Fine. And Ramesh, again, a particular personal account has come, so we have to be very particular. We have to see in what position he is. So personal account, the shop is paying, we are paying cash to Ramesh. So what we are giving him cash, so what position is he into? He is actually receiving the goods, as you can see. So a receiver under personal account would go to the debit side. So we find our journal entry, as you can see, that Ramesh is being debited over here. So debits are generally written first, okay, right? So we are writing debits first, and then the credit part, which is the cash account over here. Cash account has come to the credit side and under this question. So Ramesh account debited to cash account would be the journal entry. If we go on to solve the same question with the modern rule, okay, the shop paid cash to Ramesh rupees 15,000. This is the same question, as you can see. So the two accounts involved were the cash and your Ramesh account. Fine. So modern rule classification for cash is an asset and Ramesh is a liability, because we have already told Ramesh as a liability. We have written in our books, since we have taken goods from him on credit, so he was already classified into a liability. Fine. So the rule for asset was an increase in asset is debited and a decrease in asset would be credited. Now what is happening over here is we are paying cash, and what is happening, cash is going away, the cash is being decreased in the hands of the shop. So there is a decrease which can be seen in the part of this question, and the decrease in asset is generally written on the credit side. Exactly. Now when we are paying cash in the same question, what actually is happening is our liability is also decreasing simultaneously, because if we pay cash to Ramesh now, like we are paying it now, he would not be in a situation to claim it later, because we have already paid the cash, right? So a decrease in liability, there is a decrease in liability as well. So a decrease in liability would go to the, yes, debit side. So we get the same journal entry, as you can see. Ramesh account on the debit side and cash account on the credit side. So under both the rules, under both the methods, we find the same journal entries. So the choice is yours. Whichever way you want, you can solve your questions. Fine. So guys, this were some of the examples. Stay tuned for more transaction and more journal entries, which is coming straight away. Fine. And hope you have liked my videos. If you have not yet subscribed, please guys subscribe it, because it gives me motivation to create more videos for you. Thank you so much for watching. Thank you so much.